Level 1, $4,212. Three green digits sit after the dollar sign on a phone screen nobody else in your life has looked at yet. 2 states away, a fraud analyst named Trevor Wickham is working through 400 flagged withdrawals before his coffee goes cold, every one of them 6 figures or higher. $4,212 will never reach his queue. It isn't a shape his model was built to notice. The number is real money, and tonight it changes nothing, not your rent, not your shift tomorrow, not the way the apartment door sticks every July. No email arrives, no hold appears on your account. Most exchanges let a wallet like yours move up to $2,000 a day and $10,000 a month on nothing more than an email address and the photo ID you uploaded once and forgot about. You are inside that tier by a wide margin. You could double this number tonight and still not trip a single automated review. The fraud model watching this exchange was built to flag withdrawals in the 6 figures. $4,212 isn't a shape it knows how to look at. You are one of roughly 40 million wallets sitting under 5 figures inside that exchange's own numbers. And to a system built at that scale, 40 million of anything isn't a person. It's noise with a decimal point. You try to explain the number to a friend over text. He asks if it's the fake internet money thing. You don't correct him because nothing in his bank's app or yours would prove otherwise. A hardware wallet the size of a USB stick is holding 12 words worth more than your car, and no loan officer has a form built for reading those words as collateral. Across every blockchain combined, close to 4,500 wallets cross 5 figures in a single hour. Yours is one unprinted line inside that count, filed nowhere, watched by no one. You still ask your manager for Saturday off. The system isn't ignoring you, it hasn't been told you exist yet. At $4,212, that's a distinction only you're in a position to notice. Level 2, $61,000. The withdrawal button has gone from blue to gray, and underneath it sits a new request, a live photo of your face, holding up the same government ID you uploaded once and never thought about again. Priya Nataraja processes about 300 of these, holds a shift. Most clear in under an hour. Yours doesn't, because $61,000 has pushed you past the exchange's enhanced due diligence line, a threshold that on most platforms sits somewhere between $50,000 and $75,000 in cumulative volume. Below that line, you're an email address with a balance attached. Above it, you're a source of funds case, a form asking where the money came from, what you do for work, whether you've ever held a license from a bank, a brokerage, or a government agency. An algorithm doesn't read that form. Priya does, along with roughly 200 others like it before her shift ends. Fewer than 3% of accounts on this exchange ever cross the line that put you on her queue in the first place. We don't ask if the money's clean, she tells a new hire most months. We ask if the story matches the wallet. Yours does. A coin you bought for $600 11 months ago, screenshots dated to prove it. It still takes 3 business days to clear. For those 3 days, the number exists and doesn't. You can watch it move on the chart. You can't spend it, wire it, or use it to convince a single other person that it's real. Your rent is still due on the 1st, and $61,000 sitting one tab over does not pay it early. Suspicious. Just finally large enough to be asked about. Level 3, $340,000. The wire lands in your checking account on a Tuesday morning, and by Tuesday afternoon, your card gets declined at a gas station 40 minutes from home. Gordon Aldis has never met you and never will. He's a compliance analyst 3 departments away from anyone who could explain the decline to you directly. His bank's monitoring system doesn't wait for a teller to notice anything. It auto-flags any incoming wire over $10,000 tied to a known exchange. $340,000 arriving in a single transfer into an account with no wire history before this month is exactly the pattern the rules were written to catch. Gordon opens a case. He has 30 days to decide whether to file a suspicious activity report with federal regulators, and nothing in the bank's policy requires telling you that decision was ever made. If he files it, it joins a federal database that logs somewhere around 2 million of these reports a year. Most of them read by software before any agent opens one by hand. There is a real chance you never learn whether a report exists with your name on it. Filed by a man 3 departments away, about a decision you were never part of. It isn't personal, he'd say, if he ever spoke to a customer directly, which he doesn't. It's the transfer pattern. It would flag anyone's account. The freeze lifts 6 days later, no explanation attached. Just a released hold and a customer service line reading from a script with no access to Gordon's notes on the case. You bought $600 of a coin 11 months ago. $600 became $340,000. $340,000 became a case number, and a case number is what you are to Gordon now. Level 4, $1.2 million. The phone that rings is not the number you've had since college. Melissa Ostrander introduces herself as your private client lead, and she already knows your account balance before you've said a word. $1 million in net worth, outside your primary residence, is the line the SEC draws around what it calls an accredited investor. Cross it, and doors open, deals, funds offering terms that don't exist for anyone underneath it. The exchange's private wealth arm reaches out before you think to ask. Melissa's onboarding call covers a dedicated support line and a lower fee schedule. She also offers to walk you through tax lot reporting for the year, since the standard export tool most users rely on starts breaking down at your transaction volume. The tier above yours needs $10 million in verified assets. Below that, her manager doesn't take the call personally. Most people in this tier don't call us first, Melissa says. We call them. Does the concierge line make you rich? It doesn't. It makes you visible to Melissa, to her manager, to the internal system that now tags your account for a human to review every trade over a certain size instead of letting an algorithm wave it through. Visibility at this altitude runs in both directions at once. You buy your mother a plane ticket for a holiday you used to skip every year. She asks if you're in some kind of trouble. Not trouble. Just tracked for the first time by name instead of by number. The fee schedule Melissa quoted saves you roughly 0.5% on every trade going forward. 0.5% of a number this size is a car, moved by a line in a spreadsheet neither of you will ever look at twice. Level 5, $6.4 million. A sell order for $6.4 million placed on the open exchange doesn't disappear into the order book, it moves it. A single market order at this size would push the price down roughly 4% before it finished filling, eating into your own proceeds with every fraction of a second the order sits open. Dmitry Kessler runs an over-the-counter desk built for exactly this problem. He doesn't touch the public order book at all. Desks like his rarely pick up the phone under $250,000. Below that line, you're still just an order sitting in the same book as everyone else. He calls 2 or 3 counterparties who already hold inventory. He negotiates one price for the entire block, then settles it off exchange over the following 2 business days, at a small discount to the current market price. None of it touches a chart anyone else can see. A $6.4 million market order moves the price 4%. A phone call to Dmitry moves nothing at all. The number doesn't scare me, he tells you on the first call. The impact does. Those are 2 different problems, and only one of them is yours to solve alone anymore. You used to sell by pressing a button at 2 in the morning. Now selling means scheduling a call, and the call determines the price more than the market chart does. Nothing about the coin changed. Only the size of the door it has to leave through. The 2 business days it takes to settle feel long the first time. By the 3rd call with Dmitry, you've stopped checking the clock. The delay is the price of the discount, not a problem to be solved. Level 6, $19 million. A capital gains figure this size doesn't reach a human being at the tax authority first. It reaches a scoring model built to flag large, one-time gains for a closer look before anyone opens the return by hand, and a return like yours clears that threshold by a wide margin. Renata Sokolova has read that model's public documentation more times than most attorneys bother to. Her job for the next 6 weeks isn't to hide $19 million. It's to build a paper trail that survives contact with whoever reads your return line by line, cost basis on every lot, dated and matched to a wallet-by-wallet trail cross-referenced against every exchange account you've ever opened. She also opens a conversation about a trust structure. Not to make the money disappear, but to control the pace at which it becomes taxable in the first place. The gain itself is taxed at 20% federally, plus a 3.8% surtax that only kicks in once your income clears a line you pass the moment this number hit your return. Does the trust protect $19 million from the government? It does not. It only protects it from you moving too fast in a single year and paying the highest rate on all of it at once. People think we're hiding money, Renata says. Mostly we're just slowing it down, not hidden, just slower. You used to do your own taxes in an evening with one browser tab open. This year takes a team and a retainer that isn't small, 11 pages. In the end, just to explain what happened to money that moved on the blockchain itself in 4 seconds. Level 7, $52 million. Adrian Voss doesn't ask what you do for work. He already has a full balance sheet in front of him before the first call ends. $52 million sits inside the range where a multifamily office will take you on as a client. Most set their floor somewhere between $10 million and $50 million in investable assets. You've cleared it by $2 million. His onboarding isn't really about the money sitting in the wallet. It's about the parts of your life the money has started to touch that you haven't thought to protect. A public wallet address tied by on-chain analysis to a name, tied by 2 more clicks to a home address. His office charges roughly 1% of assets a year to manage what you have, which is itself a new kind of number to sit with. Adrian's office runs a security review before it runs a portfolio review. He recommends a kidnap and ransom policy, standard for clients past a certain threshold in this asset class specifically, and a change to how you talk about money in public. We don't insure your money anymore, he tells you. At this size, we insure you. You stop posting your city. You stop mentioning the exact coin, even in passing, even to people you trust. A wallet balance of $52 million is public information the moment anyone connects it to a face, and Adrian's entire job, most weeks, is making sure nobody does. The number bought you a family office. It also bought you a reason to need one. The policy Adrian recommends runs a few $1,000s a year and covers a scenario you've never once said out loud, not even to the person you'd call first if it happened. Level 8, $210 million. A wallet this size doesn't stay private by accident anymore. Public trackers built to watch large holders flag any address moving 9 figures within minutes of the transaction confirming on-chain. Somewhere, a stranger with no relationship to you at all is already refreshing a feed to see what you do next. Yusuf Kader runs principal trading for the desk that now handles every move you make. A market order is what a wallet uses when it doesn't matter who's watching. A block trade is what a wallet uses once everyone already is. The desk's own rule is never to trade more than about 2% of a coin's daily volume in a single session. Cross that line and the price moves against you before the order even finishes. Before you sell anything at this size, Yusuf's team spends days modeling the market's depth. Then it coordinates timing with 2 other desks holding similar positions. The trade moves out in pieces small enough that no single headline gets written about any one of them. At $210 million, Yusuf says, the trade is the news. Our job is making sure it's boring news. You don't own $210 million the way you owned $4,212. You don't own it at all, not in the sense that word used to mean. You coordinate it on a schedule set by people whose entire job is making sure the rest of the market never notices you moved. One track account with close to 90,000 followers posted your wallet's last move 4 minutes after it confirmed. Nobody on that account knows your name. All 90,000 of them know your balance to the dollar. 7 strangers now read the same 12 words that used to belong to only you. Somewhere underneath all 8 of these numbers is the same 12 words, in the same order that were true at $4,212. Nobody read them then. At $210 million, 8 different people read them before a single dollar moves. A verification associate, a compliance analyst, a private client lead, trader, a tax attorney, a family office manager, a head of principal trading, and still, at the center of all of it, you. The blockchain never changed. It has no idea what a dollar is worth, and it never asked. Every system built on top of it does know, and every one of them was only ever waiting for the number to get large enough to notice you. 3 green digits on a phone nobody else was looking at. That's where this started. Underneath every number that came after it, that's still exactly what this is. If this changed how you think about what actually happens after the number turns green, follow for the next system.